Life Healthcare was previously known as Afrox Health and relisted on the JSE in June 2010.
And a very good relisting it was. 2010, 2011, it continued to move northwards and upwards as people became aware of just how strong this one was with regard to its earnings power. Been a little bit more muted since then, even though it's also now internationalizing its business model.
Market cap here, we're looking at 39.6 billion rand, a PE of 21.7, dividend yield of 3.84%. So it's not small by comparison. I mean, it's slightly smaller than Netcare, and but still a sizable opportunity.
No, certainly. I think if we were to look in, obviously, over the last few years, Life Healthcare did very well until recently. Over the last 1 year, certainly the share not going anywhere, but it offers quite good dividend yields compared to Netcare and Medclinic at about 3%. Earnings also slight PE also slightly less than the two bigger competitors. So I think it's a good share, but for us, I think there's a little bit of nervousness in it. It still needs to establish itself in the South African market and try and compete head on with Medclinic and Netcare.
Do you agree with Joseph that there's nervousness in the Life Healthcare share price story?
I think that initial move that you can see there was just, as I said earlier, the market realizing just how big this company was and how strong it was because it had been away from the market for a while. I think since then it's sort of stabilized a little bit, and it does reflect the sense that maybe their fortunes were a little bit becalmed and that growing market share in South Africa was going to be tough with those two big competitors. But remember, they're in Poland now and in India. So in India, it's a stake that they've taken in a small private healthcare facility there. As you can well imagine, India, massive, massive potential, but a rather small private healthcare market. Poland, though, is interesting. It's a country not dissimilar to South Africa in terms of its demographics. It doesn't get talked about much, but it is a solid European Union member. So they've been buying clinics and so on there. The recent results, a little bit disappointing, and I think it was because the debt...
Why were the recent results disappointing?
I think debt levels rising a little bit to fund these acquisitions, particularly in Poland. So that caused a little bit of a hiccup. But I must say, I like them.
Do debt issues concern you, Joseph?
Yes, certainly it does. Sometimes it takes very long for companies to be able to integrate and bed in whatever acquisitions they have taken on. So I like companies really that bring a new strategy and a little bit of organic growth because sometimes it does take long, to be able to reap the rewards of acquisitions and expansion, obviously, into the overseas market. Now, you also need to be careful in terms of which markets are you going into. People talk about India. India certainly has got one of the biggest populations, obviously, after China, but they have disposable income, or are they going again possibly to focus more on the higher end rather than into the lower end of the market?
The emerging market play.
And look, I think India is fine. I think there's plenty of potential there because there is a layer, obviously, of rich people. So we'll see how that evolves. It's a regulatorily difficult market. Indians are very much in love with their regulations. I want to just ask a question, though, about the local market, because we've got a moment here. And that is that if you get sick in this place, right, where do you go? Would you go to like a Netcare or a Mediclinic or a Life Healthcare facility because you preferred that brand? Probably not. You would go where your specialist was.
And where your specialist, but generally ease of...
If you were having an emergency, you would go to what's nearest, right?
To the closest
But what that tells you is that here in South Africa, these companies are all viewed in very positive terms. You would generally expect that if you go to any one of these three companies' facilities, you could be reliably assured you were going to see a top quality specialist or GP in the trauma environment and so on and so forth, not so?
There's also the part of the equation that you could find a top quality specialist in a hospital close to you.
The other thing that may happen, of course, is that your particular medical aid might have a deal with one particular of these hospital groups, and then you're obliged to go there because that's how it works.
How does it work for you, Joseph?
Or the closest to you, that's where you go. But also, if you look at the specialists, really, they kind of work together and they refer you if you're just coming from a GP and so on. But I think I tend to see that most people just go to the nearest, closest to them.
Hot or not
as a
on
share,
the story?
not hot.
Paul, hot or not?
No, I'm happy to call it hot too. New management, remember, Mike Fleming has stepped down, but he was replaced by Andre Meyer, who came from MedScheme, right? And remember, the medical aids and the hospitals are like the two arch enemies. They're always taking shots at each other because it's always an issue of margins versus affordability. So he certainly knows that business. He's a very skilled corporate manager. So I think this one is sort of a bit of a sleeping giant. It's been
You're
a bit
giving it a hot
I'm
as
happy to call
well.
it
As I
hot.
said at the outset, you love this environment.